Welcome to Morningstar's 3 Stock Picks. I'm Holly Black. With me is Ken Wotton. He's manager of the Gresham House UK Microcap Fund. Hello.
Hi, Holly.
So you're in the microcap space, and that means actually quite a lot of the stocks you invest in are on the alternative investment market. And you're going to talk us through 3 you're feeling quite positive on at the moment. What's our first stock?
Sure. Okay, the first stock is a company called XPS Pensions Group. It's an actuarial consultancy business, which sounds a bit boring, but it's actually, we think, a really exciting opportunity. It focuses on the defined benefit pensions market and provides services and advice to the trustees of those pensions. What XPS are trying to do is build a credible leading second-tier player, try and challenge those large players who are expensive and perhaps where quality of service is less of a focus. They've been very successful in that market. They've made material acquisitions since they've been on the market. And business also has a very steady track record of generating cash and paying out attractive dividends. So it's a business which derated on the back of the COVID-19 crisis, but really is pretty resilient in terms of its operations and the sector it's focusing on. It's not very economically sensitive. So we've been adding to our holding there at a lower price. We think there's a really good opportunity for a long-term investment story.
Okay, and what is stock number 2?
Stock number 2 is called 10 Entertainment Group. It is the number 2 10-pin bowling centre operator in the UK. It's got 45 sites across the country. And it fits the core investment theme of ours, which is low-ticket experiential leisure. It's an area of this consumer discretionary space that we think is economically resilient because it offers value for money, and people are looking for entertainment in the form of experience rather than stuff. Clearly, COVID-19 crisis has had a sort of material short-term impact on the business. Lockdown has meant that their centres have been closed. They're not generating any revenue. But the management team is very strong. The long-term story, we think, still is intact. And importantly, the company's balance sheet means that it has the cash available to sort of withstand a very protracted lockdown period, which actually doesn't look like it's going to come right.
And have you spoken to the management about changes they're going to make to the business? Because I'm sure a lot of people are going to feel pretty reticent about putting their hands into a bowling ball after this.
Yeah, it's a good question. I think they're very, very cognizant of the fact that being able to demonstrate cleanliness and sanitisation procedures is going to be key to confidence for customers. And one of the things they're planning to do is to only open every second lane, so that nobody is sharing a run of balls. It's just one group which will share the same ball, and then they'll be cleaned sort of after every round. So they're very aware they need to demonstrate that that's all working effectively to keep customers coming in. But this is a site where people might feel more comfortable to come for a drink or for food because they can space out much more effectively than they might be able to do in a pub, for example.
Okay, and what is our final stock?
The final stock is a company called Inspired Energy Group. Inspired Energy is a specialist energy procurement consultancy business. So it focuses on mid-sized corporates, typically ones that use greater amounts of energy than average, and then advises them on the sort of optimal tariffs they should be entering into for their gas and electricity, and also advises them on how they can reduce their energy consumption. So it's very topical at the moment, in sort of as sustainability becomes a more sort of prominent thing in people's minds. And this is a business that has really successfully used the AIM market over the time it's been listed. So we first backed the business in 2011, when it came to the AIM market. It was a 10 million market cap company and made profits of just over £1 million. Roll forward to last year, and it made profits of 18 million.
And is it often that you'll hold a company for that long, particularly it's still fitting your microcap remit?
Yeah, so we are long-term investors. On average, we'll hold a company for 4 to 5 years, but we have some which we hold for shorter times and some we hold for much longer, including Inspired Energy. And we look at it based on the opportunity and whether we still believe there's good attractive returns to come. And this is in the category of it was a very small company. It's now sort of medium-sized company, but we think there's a good growth opportunity for the next few years.
Ken, thank you so much for your time. For Morningstar, I'm Holly Black.